All right. Any questions or comments?
Ramin,
Yes. Yes.
uh, just want to say that that market analysis was absolutely phenomenal. I really, especially in the slides with the charts you're like going into how Nasdaq is close to a bear market again and the retail sales and whatnot. I do have like three questions though that I
Sure.
want to ask. So the first one is I kept on hearing this thing where $2 trillion worth of options expired on Friday.
Yes.
So what was it? It wasn't like quadruple or triple witching. What was it? What's this amount usually? Is it not 2 trillion? I'm assuming it's under that, right?
No, it is. I mean, it is close. The problem is it's a slow time of the year, and that plays even more, right? So when the volume is low, it has a lot more effect. So if this thing would have happened, let's say in November or so, even September, we wouldn't be talking as much. But with the low volume, it was a lot of options. And now coming Monday, we got the rolls. And so, but there's a lot of rolling and filling and that, but that's a very good observation. But it's more of because of the time of the year we are in. You're absolutely right. It was not even triple witching, it's not quadruple witching. It was just a lot of options getting expired, but the volume has not been that great. So it gets a little exaggerated. And that was one of the reasons I thought, that gap play on Friday would not work out just because of things like that.
Right.
Very
Okay. And my second question is, I saw the statistics for NASDAQ that you had on that slide. So when you were talking about sell in May and go away, does that only apply to Dow?
Oh, no, I mean, that's a good question. So the reason we use Dow is because it has the longest history and NASDAQ is the youngest. Of course, Russell is actually the youngest, but we don't really use Russell. We usually use S&P, the Dow, and the NASDAQ. So basically, the Dow has been having the longest, it's over 100 years of history we have. S&P is the next, like 1950s, and then NASDAQ is like 1970s. So, but generally it does apply to all of them. This one you notice is from year 2000. The history we go back is like 1950s. So basically for the statistics that we've had in the last week, for instance. So that's the reason you didn't notice that much as far as still applies. Sell in May generally applies for all the indices. Let me see if I can back up on this. So if I compare it, you can see that sorry about this, I don't want to minimize it. So if you notice that, look at the October and so look at the movement from November 1st, and usually it does well. But again, this is from 2000, Lucas, and 2000, like we had some really bad years in the beginning of 2000, 2008, 2009. So I'd rather have a longer one. So that sell in May really applies to generally to rest of the, for the like 50, 60 years. So now if you would have sold here and bought here, yeah, I mean, it would have been pretty good actually. But again, this is the past 22 years. So but that's a good observation. So, I mean, the Dow is more clear than NASDAQ. But also you have to remember, Lucas, that one of the reasons for this looking really good is we've had such a big bull market in NASDAQ, and especially from 2009 and 2009 to 2020, even 2020. I mean, amazing numbers. So it was really growth story. So that kind of changes the whole as far as a mixture of what is happening with the stock. So Dow is, it was more of an average. So, but that's a good observation. And thanks for bringing that.
Perfect. And then I'm assuming from October to November, where on average it has that nice run to the upside. Maybe that's because of earnings.
Yes, so that's a good observation also. It's again, we've had it's been again unusual from especially 2009 to 2020 or even 2021. They that could be one of the reasons, of course. Yeah. But September notoriously, it's funny, on any index that you notice, September is not a very good month. So unless the markets have been really going down, sometimes there's a reversal in September, but generally September is not the best month. One of the things is said to be because, again, Labor Day weekend, people are coming back. So they get real down to real business. The things that they want to for 3 months, getting out of things, they tried at that time. So
okay, that makes sense.
Yeah.
And my last question, a little bit off of tangent, but I want to ask because you brought it up. You said that the iPhone 14 is getting released.
Yeah.
So I don't know how familiar you are with Apple products, but I know like iPhones get released every September. And I was wondering if you like watch Apple during that time and if you've noticed anything every time the conference starts on that specific day.
No, that's a very good point. I don't have the statistic with me, but I do have it. I can't recall it, but you're absolutely right. Usually you have the runoff till the release. The question is, right now we are in critical points. And as you correctly mentioned, iPhone is the biggest product. It used to be iPad and, all the watch and whatever, iMac, and now it's iPhone. I mean, it's huge. It's a country by itself. So the question they have to answer is the production and the supply, and how they're going to deliver that. So I believe that's in the past, I remember like with the iPad release, right? So it would be a beautiful run, expectations to that, especially when Steve Jobs was in helm. But lately, it hasn't been as clear as it used to be because we have so many other factors involved, especially again with the supply side of things. But yes, there is been tendency, and of course that's going to affect their earnings. So the market is really watching for that. So they, the same thing, what is happening, the factors in China, how they got affected. And the question is not about the release, it's going to be how much of that release is going to be. Can they respond? So, but yes, there is a pattern. Used to be a lot clearer, but again, last 2 years with COVID really changed everything, Lucas. So that has kind of affected things. But again, this is their biggest, by far, their biggest product. So
right. Okay, thank you so much.
You're welcome. Any other questions? Comments?
Ramin, what you feel or what you think about? There seems to be a lot of hedge funds and a lot of professional portfolio managers who are all short the market, basically thinking that this is like this bounce is not going to be sustained. And I mean, do you think that a drop in the market is then like preordained, or it's a self-fulfilling prophecy? Or do you think if it doesn't fall, there'll be a big gamma squeeze up?
Very good question. Yes. So the question we have to ask is, again, if there are too many people thinking the same way, is that the end of it? So, but what I'm hearing, Martin, fundamentally, so this is a lot of, it's interesting that we have, these are for change from the past 11, 12 years. Things are really focusing on fundamentals now, which I really like, because whatever the markets do, I like to have some kind of a rhyme and reason, because it's still, economic related. Everything is about earnings, and they've been reducing the earnings growth for the next 2 years, especially next year. So they keep adjusting that. So from fundamental point of view, and we've talked about, if you recall, we look at the discounted models, they are looking at a lower end of the, as far as valuation. So you're absolutely right. There's a lot of professionals think that this is more of a bear market rally rather than turnaround. And even if it was a turnaround, it will be short term, because fundamentally there's still a lot of things that going to affect the earnings, and earnings is what makes the markets. So basically, I think this time I see their point of view. So it's not like this is the biggest opportunity to go and buy bargains. I do believe there are some bargains, absolutely, but I don't see, there's nothing like what we had, let's say, in 2020 March. And I could see value, it was just a feast. Here, these bear market rallies happen, they're pretty drastic. So that's what that 200-day moving average was pretty important. If we break that, and that is, again, this 200-day moving average comes from the institutions. If that means the institutions will start accumulating if we broke that. Since we didn't right now, my thoughts are that this could be another leg down. Now, the question is, if we have this leg down, are we going to go back to that 3640, 3620 area again? And could we go lower than that? And I think that I really doubt that we will break below that. I think there's a lot of other factors that market has already priced in. So unless nothing really drastic happens, which we already have had with the war and of course the inflation, now the central banks are trying to stop that. The biggest catalyst will be something like what is going to happen with in China's election. President Xi, is going to do whatever it's his power, to make sure things going to happen. And Chinese economy is really getting affected tremendously with his policies. So what is going to happen? Or we have the big another COVID or something. Other than that, I think the markets are properly gone down enough. So we will go down, but I don't think we will go down below that 3620. I don't see a catalyst for that. But I do also agree with this, not all of them, but some of the professionals thinking that this is we are overheated right now. Most people, we used to buy the dip, and now perhaps maybe they're gonna take some profits at this time. The other thing is, of course, as I mentioned, it's the seasonality, it's the August, things can really be volatile, moving up and down. So, but I would be selective, Martin. There will be some, again, there are some opportunities. Even in China, we'll see there's some opportunities arising from all the slowdowns we've had. And with the stimulus, that's going to be, regardless of where it comes from, it's the stimulus is stimulus. So that could bode well with some of the stocks in China. So I don't know if that was helpful.
That was helpful. Thank you, Rami.
You're welcome. All right. Okay. If, no other questions. One thing, it's a housekeeping. I will be traveling next week on Friday. So I will be on Saturday, I will have my laptop. So on Saturday, it's gonna be hectic. I'm trying to get the things done with Kimmy with the hours change and getting my slides. So if that's okay with you, I'll have that one day, we probably won't have a market analysis. And then maybe I can wrap, give some more information on Wednesday. And the following Wednesday, we do a little summary of the market. But it's just might be a little difficult. So I just want to give you a heads up. I will let you know 100%. Because by the time we get to this Friday evening and then it's Saturday and then Sunday, and then I'm coming back Monday. So, all right. Anyway, any other question? Any comments, suggestions? If not, well, enjoy the last couple of weeks of August. And before you know it's Labor Day weekend. I wish you a wonderful weekend, and I'll speak to you on Wednesday. Thank you so much, everyone.
And thanks,
Have-
Ramin.
Thank you, Ramya.
Have a great weekend.
Bye.
Thank you.
Thank you, Ramin Chan. Thank
Of
you.
course. Bye-bye. Miss. Bye-bye.